Hi there, this is routine weekly traffic light update for the week ended on December 16, 2016. Prior to going into the detail of the presentation, here are the disclaimer. Traffic light and capital appreciation point are the results of proprietary risk analysis model and should be used as a part of your due diligence process. Crystal Clear Indicator is not a licensed financial advisor. Investing involves risks. Here's the agenda. We will review the latest traffic lights on S&P 500, Dow Jones, and NASDAQ Composite. We'll be looking for bearish and bullish trades. Here is traffic light S&P 500, a long-term indicator as of December 16, 2016. For this week, I decided to show only the period of the last 10 years rather than the typical 20 years for more clarity. Let's review the legends. The horizontal line you see here, the purple and the red, apply to the traffic light S&P 500, the green triangle line. The blue line here is a daily close of an ETF SPY, mimics S&P 500. The red line is a long-term conservative line. When the green line crosses the red line as shown here, if it crosses successfully, it is better to take a long-term conservative positions. The purple line is a long-term long position indicator. When the purple line is crossed and the green line crosses below the purple line, it is less risky to take a large position in a long position. Right now, the traffic light S&P 500 is showing less risk because the light has been descending from orange to yellow. Monitoring is still required. In 2000, the breach of red line, not shown here, took several tries. From the clip on November 18th, we compare the current situation to that of mid-2012. In 2012 period, about this period right here, as the index attempts to reach a new high, breaking a resistance, they will pullbacks. Each pullback will less than the one before to keep the breakout intact. Let's observe whether the current market shows a similar traits as it breaks out. The difference from 2012 and current is that the current ratio is fairly high, P ratio. So that's something we should watch out for. Let's look at the traffic light Dow, an intermediate indicator. This indicator has a good history showing intermediate bullish and bearish signals, especially when the bullish red lines and bearish lines cross over and showing divergence. In 2010 period, as the index make a new high, and the green line stay low, the red line is making higher high, so the market ascends. In 2011 period, when the red line forms a bearish divergence, meaning that as the index goes up, the red line continues to descend, and the green line start creeping up. Eventually, there's a more significant corrections. At the macro level, in September 2016, we can see that the red line reached an intermediate max, or long-term resistance, relative to May of 2015. I will zoom in the graph in the next slide and to discuss bullish and bearish observations. Here are some bearish and bullish views. On the bearish side, there are 2 points. First, the bearish divergence could be forming as the index moving up much higher, the red line stayed low. Second, instead of continuing its descent, the green line is ascend and is near the resistance level. On the bullish side, there are 2 points as well. The red line continued to form a higher high compared to that May of 2016. The May 2016 period is not shown here. And second, there is a reason bounce off from the resistance and I would say support with a W bottom. I would say cautiously intermediate bullish trades continues. We can see the similar things in traffic lights and NASDAQ. As you can see, traffic light NASDAQ line made a new high, all-time high, I'll say. And at the current reading, the red line is at a resistance level and reached the highest level recorded in the last 11 years. In April 2010 period and May 2013 period, there were some pullbacks in each event when the red line reached this high. I will zoom in the mentioned period in the next slide. When the NASDAQ red line reached a new high in 2010 and 2013, the index started changing direction as the red line started to change its direction or flatten out. Let's monitor whether this situation develops in the current period. Here are some bullish and bearish observations. On the bullish side, as the index made a new high, the red line also made an all-time high. Second, there was a bullish crossover on November 14, 2016. On the bearish side, as the red line started to descend on December 13th, and the green line started to ascend. This particular piece of information was released on the subscriber website on December 13th with email notifications. Another bearish trace here is that the green line started making a higher high around September 17th. In summary, the traffic light S&P 500 is in yellow, shows more long-term bullish sign. The traffic light Dow and NASDAQ shows a more intermediate bearish signs. The traffic light NASDAQ red line start to flat and descend, expecting pullback in the near future. And consider to take some profit on long positions and increase the cash positions. With unsynchronized bullish and bearish trades, the market tend to be consolidated. Thank you for listening.